Good afternoon, guys. Welcome to the batch 5 of ATMP on the first day of the new year of 2020. I'm super excited to have all of you here join this live session today. ATMP, as you know, stands for Alpha Trader Mentorship Program. It's one of its kind mentoring program that will make you independent and stay ahead of the retail investors or traders always. Why do I call it that it's one of kind a mentoring program? First thing is our program focuses and always starts with a mindset. So one thing that you will always notice me talking about is whenever we are discussing about some methods, we always talk about mindset first. Second point, none of the methods that you're going to learn in this 5 or 6 week long program will be based on candlesticks. We are not going to learn anything based on candlesticks. Okay. Over a period of time, and even in this presentation, you will realize why candlesticks are nothing but noise, right? So I'm super excited to have all of you again. A warm welcome, a very, very happy new year to all of you. And I hope you enjoy attending this session as much as I enjoy conducting these sessions, right? Before we proceed, a standard disclaimer which I have to read out. This program is for purely educational purpose. I do not provide any paid trading tips or recommendations during this program. I'm not a SEBI registered research analyst, nor am I SEBI registered investment advisor. This program includes only learning methodologies and no trade or investment recommendations will be given. Okay, done with the disclaimer. Let's proceed. So, ATMP, why I say this program is so different. We always work on mindset first, right? Before we proceed with the rest of the things and get into further detailed discussion, let me quickly give you a little bit brief about me, my background, and why am I actually conducting these sessions, right? So my name is Amaya, as you already know. I have been in equity markets for nearly 2 decades now. However, I have been actively trading and investing for past 14 years. Initial 7 years I just wasted following some news channels, some TV anchors. I had bought some online subscription services from Money Control or PowerYourTrade.com and something like that. So basically I was having a herd mentality. I was asking my friends, where are you investing? In 2008 I got the most biggest rude shock of my life. Primarily because before 2008 crash came, we had a fantastic bull run from 2004 2005 onwards, and nobody was, to be honest, really prepared for 2007 2008 crash. Okay, so neither was I, because I was new. So unfortunately, I was invested, and I was invested with a borrowed money. I had borrowed from my father, my friends, my colleagues. I had taken a personal loan worth 15 lakhs. So, and by the time 2008 crash was done, I was down more than 35 lakhs. Okay, I was in the job. I had just started my first job in 2006 that time, and I was earning a very paltry salary, right? So, as you must have been able to imagine, losing 35 lakhs, it not only dents your mentality, but it also kills your confidence, right? So I went out of market after 2008 crash. For 2 years, nearly 2 years, I was not active at all. But in those 2 years, I did some contemplation, and I started to think about the mistakes that I was doing, what went wrong, why it went wrong. And this is how basically everything in the process kick-started, right? Uh, so in 2011 2012 I was doing some my own personal research, and I stumbled across a report by Goldman Sachs, and the report name is 10K. Okay, and I was looking at one of the slides, and I noticed that they had presented month-wise trading profits, okay, for the entire past 12 months. And I was really shocked that regardless of the market direction, Goldman Sachs is able to consistently make such a humongous profit. And whenever they are making losses, they are cutting their losses with such a grace and agility that their losses are so tiny and their profit sizes are so huge that it provoked me to start thinking on the similar lines, that if these guys are able to do it, why not somebody else can replicate their model? Okay, I understand we are very small, we are retailers by our portfolio sizes, but hey, nobody can stop you being a pro or like a Goldman Sachs with your mindset, right? Nobody can stop you from developing a similar mindset. That is the biggest problem, and that was the biggest reason why I lost that much amount of money. And that's when I realized, if I want to make any meaningful money from this market, and if I want to make any mark, okay, then I cannot afford to think like a retailer. I could be a retailer given my portfolio size, but I cannot think like a retailer. That is why the mindset, and what I call it and what you will call it from today onwards, is the alpha mindset. No matter what happens, okay, you do not look at things on its face value. You do not believe in the news which is curated, okay, which is planted. You do not believe in patterns. You do not believe in channels, and these are the common things which are fed to you by your brokers, by your friends, and there are so many different subscription providers who say that we are expert in these 100 patterns. Join our sessions and master these patterns, right? But nobody will tell you that patterns are nothing but footsteps of these pro traders, and these patterns are carefully crafted and intended to lay down traps for people like you and me, right? You will get to see a nice document that I have put together just to show you how patterns actually are nothing more than a trap, right? So coming back to the point, mindset first, that's what our main philosophy is all about. You have to get your mindset correct. If you have your mindset correct, you are in control of things. If you are in control of things, you will never experience a fear of missing out, right? You will never experience anxiety or panic if a price drops suddenly. No matter what is the situation, you will always find a way out, okay? So that's what the mindset is all about. So next session, which is on this coming Saturday, we are going to discuss whole entire hour on the alpha mindset, right? So coming to the second point, we focus on developing right setup. And when I say right setup is a setup that consistently should result in risk adjusted returns regardless what direction market is going, okay? So your setup should equally tell you to not to take a particular trade when things are not going your way, right? So setup has to be absolutely, as we always talk about being emotionally detached, right? So setup has to be on the similar lines. We try not to be happy only when we make money, but when our setup is proven right, right? So many new traders, so many new investors, when they get into market, all they expect is that if I have gotten into this stock, I want it to go up the next moment, right? This is a typical retail mindset, but that never happens, rarely happens. Maybe when you are in a secular bull run, or there is huge rally going on, when pigs are flying, probably that is when such kind of situations may happen, that you buy a stock and it hits up a circuit, but not always, right? So that is why my point is, if you have a setup that tells you, boss, you should not be taking this trade, or boss, you should not be going long on this particular stock at this price, probably you can go short, that's a different matter, you don't go short, but you should not go long on this particular stock at this particular price. If your setup tells you that, and if you have a mindset to believe in your setup, you will not go long. No matter the stock prices rises 5 rupees, 10 rupees up, you never feel the fear of missing out. You will never feel that, oh man, my setup was telling me something, but price is going the other way. You will never think like that. That's what the point is. And the main takeaway for you at the end of this session, not just this session, the end of the entire this ATMP batch 5, should be that you should not connect your happiness with the money that you're making, but you should be happy and content when your setup is proven right, right? So that's what I was saying. We disconnect our goals with money and associate with independence. Remember, the money that you are making from your trades is not something that is going to make you independent, right? It is your setup that is going to help you get independent. Correct? So going forward, this is you're going to see me talking a lot about all these things. We are not at all going to learn candlesticks. There is one small portion probably in next or the session after that where I will basically tell you what a candlestick is, because candlestick is nothing but an outcome of a price action, right? So there is no alternative to price action. So that is where you will basically see how is candle basically made, what is the composition of a typical candle, and so on. The sole aim of this program is to be independent. At the end of this program, you should have the right mindset, you should have the right setup, you should have and basically when you combine these two things, the outcome is nothing but independence. You are not dependent on any group who are discussing what stocks. You do not have to bother. Who is talking what about your stock? You do not have to bother. Okay, a particular name, you are following in a particular WhatsApp group exits a stock, you do not have to bother. You are independent, and there is no feeling better than feeling independent, right? So coming to the point where I was talking about why we are not going to learn about candlestick is nothing but this chart, right? So this chart is full of noise, right? Am I right? So when you are new to technical analysis, there are three things that you learn first: candles, indicators, and patterns. But this is where you are going to learn that these three things are full of noise. What is noise? Noise is anything that masks the meaningful information or the data, right? The technical analysis context, noise is everything that keeps you away from taking concrete decisions. So in your day-to-day life, in some WhatsApp groups, if you are a trader yourself, often you would notice people talking these kind of lines. Hey, there is a gap here and price must come to fill it, right? Today there was a gap down, so expect a pullback. I can plot patterns looking at historical charts, but I can rarely play these patterns live. Oh, there is a flag, stock must break out or break down from this point. Is it a doji or a pin bar? So these kind of statements you must be hearing every now and then around you. Am I right? Right? The list is endless. The candle that looks like a doji on one time frame looks like a normal candle on a longer time frame. That means candles change shape on different time frames. Candles leave gaps, and it puts a thought in traders' mind that price must come back to fill the gap. Perhaps, but who can say when will price come back to fill the gap? Candles show high and low of a particular day or particular time frame, right? But it is impossible to determine binary trend from candles. In some, candles are nothing but useless. Now, you look at this particular chart and tell me, is it possible, regardless you are a trader or investor, can you make a decision from this chart to decide whether to invest or trade this particular script? Can you? I bet you cannot, right? So coming to the next favorite point, patterns. Oh, pattern, my pattern, right? There are some common patterns that retail traders swear by: flag and pole, pennant, cup and handle, round bottom, head and shoulder, and there are some weird name patterns: bullish crab, bearish bat. Oh my god, really? Why you have to make things so complicated, man? I mean, I'm a staunch believer of Occam's razor. Occam's razor's principle means that most often complicated problems in life have simple solutions, right? Technical analysis and trading investment is same. Why does technical analysis has to be so complicated? It should not be. It's a narrative which is created by brokers, educators, so that retail always focus on candlesticks, patterns, channels, breakdowns, breakouts, right? Bottoms, tops, and forever stay lost. There is virtually no possibility that you can make a meaningful decision from the chart that looks like this, which is in front of your system right now. There is no possibility. See, there is nothing wrong trading with patterns. But if you fail to understand the context of that pattern, then you are going to end up losing, right? Typically, retail traders play any pattern for breakout basically, not for breakdown. Trust me, retail traders always play for breakouts. Very rarely you will find a trader who is playing a pattern for breakdown. And this makes it very easy to exploit patterns to lay traps for retail traders. We must remember one thing, as I already mentioned, and we must remember this very clearly. Patterns are footsteps of pro traders. These footsteps are crafted with great precision and with an intent. Now, you tell me, had it been so easy to play patterns, then every retail trader would have been a pro trader already. But is it the case? How many traders actually make money? Consistent risk adjusted money. What is the percentage? I bet it's less than 1% or 2%. Why is the reason? This is the reason. Another question that I'm always asked very often is, what is the best indicator? Isn't this the most common question comes to your mind also? What indicator I must use so that I get an edge over others, right? Indicators tell you only partial picture, okay? There is rarely anybody in the world who can use just one indicator and claim to be a successful trader. You just cannot use one indicator and be successful, okay? Eventually, when you don't get above average results using one indicator, what happens? You add another indicator, you add RSI. Okay, let me try adding RSI. I will add money flow index also. I will add CCI also. I will add Arun crossovers also. Let me add some more exponential average. Let me add 200-day moving average also. Let me add a super trend also. Seriously? And what happens after that? You end up with a messy setup which is just like that in front of you. You don't have to make technical analysis so complicated and make your life mess. You don't have to. This is what alpha strategies are all about. My strategies are designed with such care that no matter what level of technical analysis are you on, you will never feel a problem at all. These methods are very simple, and these are simple because they are based on direct price action and trend and sentiment of market makers. And eventually you will learn all these methods in coming weeks, right? So the point is, there is no alternative to price action, okay? And there are hundreds of books that will talk about price action, but nobody will teach you to read the sentiment, to read the trend behind a particular price action. Nobody will tell you that price action, which is a virgin price action, has more probability for a trade to turn in your favor than not. Nobody will tell you what is a virgin price action. Don't worry, you will learn these things in this program, right? So too many indicators always leads to even more noise, right? Let me show you a beautiful document that I have. Okay, I'm not able to open that document, but what I'll do is I will send this particular PDF PPT to everybody of you who have joined this program. I will email this to you. You can open that document because it is embedded in the presentation. You can open the document, or probably I will show that document in the next session. Okay, so what will you learn from this program? As I said, there are three primary alpha trading strategies that you're going to learn. A 10 rupee strategy. 10 rupee strategy is one of the most basic strategies that anybody can teach you. This strategy is so simple that I can teach this strategy to a kid in a 10th grade and even he will start making money. Okay, if followed religiously. It is so mechanical. The super trend and SMA strategy for intraday, even though I say intraday, but it works beautifully even on larger time frames, and even for investor this works absolutely beautifully. Okay. Third strategy, which is my own trademark strategy, is a level plotting strategy for Nifty. Even if you Google about these strategies, you're not going to find anything about this strategy, because most of the times when you Google level, either you will find support or resistance or demand and supply zone. So this strategy is not based on resistances and supplies, demand zones or supply zones. It is based on pure price action. Okay, and you will learn how beautiful this strategy is. The moment you master this particular strategy, I will vouch for a fact that you can start trading Nifty full time and you will see the results. Okay. We will discuss in one of the sessions how to shortlist stocks for trading and how to prepare a watch list. This is also one of the important points that people often ask me, that okay, I've learned your strategy, but how should I find a stock where I can apply this strategy and make some real money? Okay, that's a valid question. We'll learn about that in one of the sessions. Trade management to consistently make risk adjusted returns. It's one of the very important aspect and point of this program. Short strike strategies. This is what I always tell to everybody. Do not be a retailer. Retailer always want price to go up. Okay, you have to remember one thing, that fear spreads faster than greed. Okay, the money that you will make in shorting is nowhere comparable to what you will make on the long side. Trust me, I'm not trying to convert you into a trader. I'm not trying to tempt you to become a trader, but what I'm trying to show you is the other side that you are missing out for so long. You have to learn how to short. What are different ways to short? What are different instruments to shorts? And you just cannot short because overall Nifty is range bound. You cannot do that. You have to find trend. You have to find trends. And unless you know what is a binary trend, you cannot actually short anything with confidence, right? And binary trend is something that is persistent. Regardless of the whipsaws that come in in a few days, it doesn't matter. Binary trend is always consistent. Okay, and you will learn about these trend based strategies as we go further in our session. Price optimization strategy is based on purely on trend charts, and when I say trend charts, Heiken-Ashi and Renko. So Heiken-Ashi is going to be the base for all of our strategies. We are not going to discuss candles, but all our strategies are based on Heiken-Ashi. Okay. Price optimization strategy works beautifully for stocks which are range bound for a very long period of time. For example, L&T Infotech, L&T Technology Services, they are range bound for past 12 months, right? But how many times these stocks have moved from 1400, 1450 to 1700, 1800, and again fallen from 1800 to 1500? So many times, right? But how will you find these trading opportunities is only when you know what is the binary trend at that point of time. So you will learn this. This is a beautiful strategy. What happens is you end up holding a particular stock and stock goes into a very long period of consolidation. So you do not have to be worried that stock is not going up, so I'm not making profit. If you look at it from a different perspective, that if I start trading this range, even at let's say 75% of the accuracy, if I start playing this range where this stock is range bound, I can get my holding cost down. If I'm getting my holding cost down, my profit is anyways growing, right? You have to think differently. You have to stop thinking like retail. You're going to learn this strategy when we discuss about Heiken-Ashis. Technical analysis support from basic level with full hand holding for all doubts and questions. I'm sure you will have hundreds of questions, and I'm most happy to answer all of them. Trade mindset preparation is going to be our next session, where I'm going to share some of my own strategies, a decision map that I have prepared for you. Decision map is kind of a tool that you can use and apply to all the trades that you have been taking, or all the investment that you have been making or you have made in past 12 months, and try and find out where you have gone wrong, where you have gone right. If you have gone wrong, what is the reason? If you have gone right, what is the reason? Basically, we try to do a SWOT analysis kind of a thing with this decision map. We try to find out what are our weaknesses. Are we getting too excited when price rises by 5%, 10%, or we get into panic if price falls by 10%. So basically, this is nothing but getting to know yourself. This decision map will help you to know yourself as a trader. What kind of trader are you? What kind of investor are you? What are your strengths? What are your weaknesses? Not necessarily. See, one thing I openly accept is I do not trade options at all. The reason is simple, because I have discovered through this decision map that I am not really good at options. I'm fantastic in cash based trading, leverage, shorts, everything, but I'm not good at options, and I happily accept it, right? But how did I discover that? is only through this decision map, and this is going to be our next session on Friday. This is the structure of the program. Session recordings will be made available, but only in case of exceptional situations. If you have joined this program, I want to see the seriousness from your side. Okay. Any queries that you have when I'm sharing the recorded video, you can send to this email ID. If at all I'm not responding to WhatsApp. Okay. That doesn't happen usually, but if at all you want to keep a track of all your questions, you can email to this email ID which is in front of you, atmpquestions@finster.in. Second month onward, if what happens is I will share some of the trade journals with you, where you can start recording your trades or your investments. And if you maintain those trade journals and trade book and you share with me at the end of month, okay, I will go through those. I will try to draw some insights from the way you have traded and the information that you have filled in those Excel sheets, and we'll get on one Skype call on the second month where we can connect one-to-one to understand what is your trading style, what is your investment style, and do you require any tweaks to customize strategies for your style to suit that style, right? So if you want to do that, it's optional thing, it's not compulsory at all. If you want to get into such call and discuss something one-on-one, then you must share your trade book with me at the end of each month and send these trade books to atmpbook@finster.in. So before we conclude, these are some of the points to note. The program duration is going to be 5 to 6 weeks, one session per weekend, but for quick learners it could be even shorter. Okay, I definitely provide handholding specific cases, but I do not give any trading tips or recommendations. I definitely validate your charts or levels. I will validate your setup, and even I will help you assess your trade setup or even customize it for you. But that's it. I'm not going to provide you any trading tips or recommendation. And please make a note of another point, that these strategies are something that I'm trying to teach you, and I do not take any responsibility of any loss incurred due to implementation of any strategy discussed during this program. I never advise to leverage or trade and invest on borrowed money or trade aggressively without understanding the risks. At no point Finster or Alpha Trader or Ameya Pimpalgaonkar will be held responsible for any loss arising out of your trading or investing. There is a possibility of loss of entire capital in equity markets, and members are advised to be informed about risk associated with investing or trading in equity markets. This is a disclaimer because I have historical data of past 8 to 10 years to show you that my strategies are rock solid. I have been using these strategies for past 8 years. This is not that I developed a strategy 12 months ago and then I'm suddenly trying to show you, right? So this is not something that I'm trying to do here at the moment. So that is why this standard disclaimer. And I'm really happy and glad that you all decided to join this batch 5, and see you on Sunday at 9:30 p.m. IST. Please note the time. Saturday 9:30 p.m. This is when we will meet. Okay. Thank you so much.